The best protection for inflation is your own earning power. I mean, somebody that is a first-class surgeon or lawyer or teacher or salesperson or anything else.
Are you seeing signs of inflation beginning to increase?
We're seeing very substantial inflation. It's very interesting. I mean, we're raising prices. People are raising prices to us. And it's being accepted. I mean, it's not, if we get, well, take home building. I mean, the cost of, we've got 9 home builders in addition to our manufactured housing thing, and then operation, which is the largest in the country. So we really do a lot of housing. The costs are just up. Steel costs, just every day, they're going up. And there hasn't yet been, because the wage stuff follows. I mean, if the UAW writes a 3-year contract, we got a 3-year contract. But if you're buying steel at General Motors or someplace, you're paying more every day. It's an economy really, it's red hot. I mean, and we weren't expecting it. I mean, all our companies, when they thought when they were allowed to go back to work, or various operations, we closed the furniture stores. I mentioned, they were closed for 6 weeks or so on average. And they didn't know what was going to happen when they opened up. And they can't stop people from buying things, and we can't deliver them. And they say, well, that's okay, because nobody else can deliver meat, and we'll wait for 3 months or something of sort. But the backlog grows, and then we thought it would end when the $600 payments ended, and I think, around August of last year. It just kept going, and it keeps going, and it keeps going, and it keeps going. And I get the figures every week. I call, or Bumpkin calls me, and we go over day by day what happened at 3 different stores in Chicago and Kansas City and Dallas, and it just won't stop. People have money in their pocket, and they pay higher prices, and when carpet prices go up in a month or two, we announced a price increase for April. For our costs are going up. Supply chains all screwed up, for all kinds of people. But it's almost a buying frenzy, except certain areas you can't buy in. You really can't buy international air travel, and so the money is being diverted from a piece of the economy into the rest, and everybody's got more cash in their pocket than, except for. Meanwhile, it's a terrible situation for a percentage of the people. This suit, I haven't worn a suit, for a year practically, and that means that the dry cleaner nurse just went out of business. I mean, and nobody's bringing in suits to get dry cleaned, and nobody's bringing in white shirts to the place where my wife goes. The small business person, if you didn't have takeout and delivery services for restaurants, you got killed. On the other hand, if you've got takeout facilities, same source sales at Dairy Queen are up a whole lot, and they adapted them. But it is not a price-sensitive economy right now in the least, and I don't know exactly how when it shows up in different price indices, but there's more inflation going on than quite a bit more inflation going on than people would have anticipated just 6 months ago or thereabouts.
Yeah, and there's one very intelligent man who thinks it's dangerous, and that's just the start.
Here we are in this world where we had 0 interest rates last week this week on a 4-week note, and Berkshire Hathaway, which has more than this, but let's say we had $100 billion in Treasury bills. We have more than that. Before the pandemic, we were getting about $1.5 billion from that a year. At present rates, if it's 2 basis points, we'd get $20 million. Imagine your wages going from $15 an hour to 20 cents an hour. So it's been a sea change, and it was designed to be that. I mean, it was that's why the Fed moved the way they did. They wanted to give a massive push, just like Mario Draghi did in Europe. If you discount it back, and you're discounting at present interest rates, stocks are very, very cheap. Now the question is what interest rates do over time. But there's a view of what interest rates will be based in the yield curve out to 30 years and so on. It's a fascinating time. We've never really seen what shoveling money in on the basis that we're doing it on a fiscal basis while following a monetary policy of something close to zero interest rates, and it is enormously pleasant. But in economics, there's one thing always to remember: you can never do one thing. You always have to say, and then what? And we're sending out huge sums. I mean, the President said it on Wednesday, 85% of the people we're going to get a $1,400 check, or 85%. And a couple of years ago, we were saying 40% of the people never could come up with $400 of cash. So we've got 85% of the people getting those sums. And so far, we've had no unpleasant consequences from it. I mean, people feel better. The people who get the money feel better. And people who are lending money don't feel very good. But it causes stocks to go up. It causes business to flourish. It causes an electorate to be happy. And we'll see if it causes anything else. And if it doesn't cause anything else, you can count on it continuing in a very big way. But there are consequences to everything in economics. But that is why the Googles and the Apples, when we don't own Google, we don't own Microsoft, but they are incredible companies in terms of what they earn on capital. They don't require a lot of capital, and they gush out more money. And if you're trying to find bonds that gush out more money from the federal government, we got $100 billion that's gushing out, like 30 or $40 million a year, or whatever it may be, depending on the short-term rates. So that puts the pressure on, which is exactly, of course, what the monetary authorities want done. I mean, they're pushing the economy and they're doing it in Europe, even more extreme. And they're pushing, and we're aiding it with fiscal policy, and people feel good, and people have become numb to numbers. Trillions don't mean anything to anybody. And $1,400 does mean something to them. So we'll see where it all leads. But Charlie and I consider it the most interesting movie by far we've ever seen in terms of economics, don't we, Charlie?
Yes, and the professional economists, of course, have been very surprised by what's happened. It reminds me of what Churchill said about Clement Attlee. He said he was a very modest man and had a great deal to be modest about. And that's exactly what's happened with the professional economists. They were so confident about everything. And it turns out the world is more complicated than they thought.
The best protection for inflation is your own earning power. I mean, somebody that is a first-class surgeon or lawyer or teacher or salesperson or anything else, whether the currency is seashells or paper money or whatever, will do all right in terms of commanding the resources of other people. So your own earning power is is the best hedge against inflation. The second best hedge is to own a wonderful business. Not a metals business necessarily, not a raw material business, not a minerals business, but a wonderful business. And the truth is, if you own Coca-Cola, if you own Snickers bars, if you own Hershey bars, if you own anything that people are going to want it to give a portion of their current income to keep getting, and it has relatively low capital investment attached to it, so that you don't have to keep plowing tremendous amounts of money in just to meet inflationary demands, that's the best investment you could probably have in an inflationary world. But inflation is bad news for investors under almost any circumstances. You can argue that if you owned some business required very little capital investment and had real flexibility of price during an inflationary period, so that people will continue to give up a half an hour of their own work every month to buy your product, and you leveraged it, then you might even beat inflation to some extent. But leverage is not our game. but we try to own good businesses. I think that Berkshire would not do as well during high rates of inflation at all as it does in real terms, as it does in periods of low inflation. But I think we would do better than a good many companies.